I mean, we don't particularly recommend they buy one thing or another, but we do give them the opportunity to dig into each of the different pieces we're showing, but also just to explore NFTs in general. I'm really glad actually that Max went first, because I think it's way easier to understand what's going on in NFTs when you're looking at specific examples. So if you could kind of, piece apart sort of, he was talking a lot about digital art there specifically. There's all different types of NFTs, but we'll just stick with the digital art example. There's the art, which could exist in a world where there's no NFTs. And then there's all the extra value that it being an NFT can bring to it. So who would have thought that a piece that has 10,000 pieces could actually be worth more than a piece that's one of one? But it turns out it can in an NFT world, because now you're part of a club where you can continue to get value from being a member of that club. And the NFT allows you to perhaps participate in what's happening in the future with that collection and get the next collection from what the art's doing. And now that artwork has 10,000 marketers or community members, if you will, trying to, tell everybody how that works. And then the next person coming out with the collections, like, they can see that and they're offering that collection. And anybody who didn't get into, for this example, Bored Apes First is like, well, I can see that this can actually work. And so now I'm interested in buying it. So these algorithms and the types of things that Max mentioned certainly help people to price things, but obviously there's going to be a lot of speculation around this because it's difficult to figure out sort of what the extra value is. But I think what people intuitively realize is there's a lot of potential extra value to technology that the NFT brings to the digital world in general. And then that's why it's exciting for gaming. That's why it's exciting for digital art. That's why it's exciting for, artists themselves. I mean, think about the value from, let's call it creator instead of artist, and the ability to, get some income / royalties, however you want to define it, into perpetuity or a long period of time for whatever they're creating going forward. And so there's going to bring a lot more creators into the space. So when you're starting to invest in NFTs, you have to be thinking about both sort of the underlying aspect, but is there an economics around the NFT that you're actually purchasing? So I think it makes it difficult, but actually it makes an exciting opportunity. And I think one of the biggest things we're going to see in 2022 is the financial innovation around NFTs and what people can start to do with them and understand how that really works.
Thanks, James. I've got another question, I guess, for you and for James Neary, sort of on the same theme. So, considering everything that Max and you have just touched on, what are the specific factors, that we should be looking at from an investment purpose when looking to buy an NFT? And could you give us examples of, some of those factors? Could you also, sorry, I've just had something pop up on my screen, which is distracting. Could you also indicate whether there are any NFTs, because you touched on how NFTs are more than just art. So are there any particular NFTs that could generate a yield that would be greater than another subset of NFTs? Or are there some NFTs that that someone should be looking at specifically if they just wanted capital appreciation, for example?
Wow, that's way too close to investment advice and try to tell people what NFTs to buy.
Well, let's just speak generally here.
Sorry.
Go ahead, James.
For the one that can go to the moon.
Yeah.
NFTs are an alternative asset class, and art's an alternative asset class. And art has outperformed the S&P, I actually looked this up, by 300% since 2000.
Wow.
So art has been a far better investment than the stock market has been, for example. I would say the main concerns regarding NFTs, from my own personal perspective as well, is liquidity. Obviously, if you buy a stock or you buy a cryptocurrency token, it's quite easy to get in or out of it, except some of the more alty coins. But with these NFTs, even a CryptoPunk or a Bored Ape, it's very hard to get in and out of the trade. So that's liquidity is a very big concern, and also the volatility. If you think that cryptocurrencies are volatile, wait till you come to NFTs, because these things move even more. I mean, some of these projects you just can't find a bid, and they're effectively worthless. So that's all part of the game. And as with other alternative assets, you have to build that into your complex of your risk portfolio within your whole portfolio. And I guess there's also concerns about custody, about security, about intellectual property, and these things all play a part as well. But obviously, everybody's seen some of these NFTs just, like I said before, go to the moon, and everybody's got, quite a lot of FOMO and excitement about that. You also touched on yield. So most NFTs don't offer a direct yield. Actually, I don't know if any that do. But you can have NFTs from gaming companies or metaverse land. And with those, you can stake them, you can lend them, you can borrow against them. So often what you're seeing, or sometimes you can see, is these gaming NFTs are being lent out to guilds. And these guys are then doing some revenue share. And I guess that's one way to think about a kind of yield from your asset. But if you're looking at the pure art side of things, like a Rafik or a PAG or something like that, the one of ones, I don't see any way to generate yield off those. Sometimes I'm hearing now that you can loan against them as a financial asset, but in terms of yield, no. So I think that's overall how I think about it from a financial perspective, and the risks and the way, in terms of capital appreciation, the one of ones, I guess, can move quicker and faster, but you're taking a big liquidity risk versus like a 10,000 Bored Apes or CryptoPunks, where there's more opportunity to trade those. But even those ones, they kind of all trade around the floor, most of them. And then the rare ones, super rare ones, don't trade very frequently at all. So being able to realize that extra rare premium is very difficult. That's what you need. That's what you need Max for.
Let me flip a little bit what James said on its head, but, about the illiquidity and NFTs. But then it's a step better than in a liquidity of, let's call it, analog art.
Absolutely.
Right. So we've taken a step forward. It feels illiquid compared to, crypto, and then again compared to equities. But I think one of the reasons it's become so hot so quickly is, like, if James Neary wants to sell me some art, I got to take his word for it. I have no idea whether it's authentic. Right. But if he's selling me an NFT, that's on the blockchain. In fact, that is the entire point of the deal. Right. So I think you're getting a lot more out of it, and it's making actually art like a truly investable asset class for a lot more people than it was. I mean, art might have returned, what did you say, 300% better than the S&P since 2000? But how many people were able to actually participate in that? Not that many. So now I think there's going to be a lot more people coming into the space. So I think how I want to be thinking about it is in two ways. One is as an alternative asset class, which probably won't change. And then you're still going to have extra opportunities you never thought of before. Like that was a great example about some of these gaming tokens and gaming pools and that type of investment. So that the new types of alternative investments that their returns shouldn't be as correlated to some of their other investments. But just if there's this many people coming into the space and it's operating so quickly that with the increased market size, potential market size and number of investors, that's an extra fuel behind that alternative investment that should help it over the long term. I don't know what's priced in or what isn't, but it feels like we're very early still, right? I mean, even some of the top crypto folks have come out publicly and basically said, I kind of missed how fast NFTs would come, guys who've effectively been in the space since the beginning. So we have to be early.
Okay, a couple of things on there that we'll come back to later, but James Neary referenced intellectual property rights as one of the risks to worry about. So this is a nice segue into a question for Hoy. So Hoy, from a legal perspective, and let's look at that now. If someone wants to be investing in an NFT, what are the various issues that they should be aware of? And let's look at this from, the three different lenses. So coming in as someone who's minting an NFT, or a third party who has the rights, a third party who's issuing an NFT on behalf of the actual rights holder, someone who's looking to buy an NFT, and then lastly, if you're an NFT platform and obviously putting forward the NFT for sale or transfer.
Yeah. So look, hearing all the other panel members speaking about NFT so far, so you can see the energy, you can see how the space is just going at 1,000,000 miles per hour, right? So along with 1,000,000 miles per hour, as with a lot of other developing technologies, it can be a little bit of a wild west, right? So that's how I'm thinking of the NFTs in the sense of a lot of the legal issues that are arising. So now, Kat, as you know, we could do a separate webinar on legal issues around NFTs, right? So I'll just try to go through this super quickly. I mean, the first thing that you need to think about if you're looking at a legal issues of NFT is whether you're looking at it from a buyer's perspective, seller's perspective, And then if you're a seller perspective, are you a primary seller, like the first seller, or are you a secondary seller, right? If you're issuing the NFT, are you the rights holder, or are you the third-party company or agency that's helping someone to mint the NFT? And finally, and something that we're doing a lot of work with, if you're a platform that is facilitating the sale of these NFTs, so rather than kind of going through the legal issues for each of them now, hey, I want to get involved in NFTs too, right? So like just for my kind of experience, I went off to Magic Eden, which is a Solana-based NFT platform, and I bought a few NFTs, right? Just dipping my toes in the water. Now, but that's not the important part. I mean, my NFTs are totally underwater in terms of valuation, right? So forget that. But the key point is this. When I read the Magic Eden platform terms, so Magic Eden is a platform. The Magic Eden basically in their kind of 15, 20 pages terms and conditions basically says they're not responsible for anything, right? And that any transaction for NFT is between the buyer and seller only. And Magic Eden is super hands-off, at least in terms of the terms and conditions. So no matter if you're buying or selling, keep in mind that the platform that you're using, at least right now, a lot of these platforms may not have any responsibility, whether you're a buyer or seller, right? Now, the second thing about the Magic Eden platform terms, and I'm speaking as an example, like maybe not every platform has this, but their platform terms clearly say that the terms and conditions of each sale is between the buyer and the seller. So what am I getting as a buyer when I bought the NFT that I bought, right? So what the terms and conditions of the platform said is that the NFT terms should be from the seller, right? I did a Google search, I searched up and down, I looked on the project Twitter page, etc. There are no terms and conditions for the NFT that I bought. So when people talk about intellectual property rights, I mean, do I own the artwork that I bought? Do I have a license to use it? Can I use it on third-party platforms? Can I start printing it on T-shirts? I actually don't really know, particularly since the Magic Eden platform terms says that if there's no purchase terms, right, the default terms will be that I get a license to use the NFT artwork. I get a license to buy and sell it. I don't quite know legally what that actually means, right? So in terms of the platform terms, in terms of the issuance terms, and what I get as a buyer, I spent a bit of time looking at this. I'm still a little bit confused, and that is coming from a lawyer's perspective, right? So for any lay person out there, what I would say is that you should try to know what rights you're actually getting or selling. If you're selling, if you actually have the rights to sell that, and then just make sure that your terms and conditions are appropriately drafted in terms of what you are actually trying to get out the sale or purchase of the NFT. I mean, I won't go too much into the other legalities. We can talk a bit about the regulatory outlook later, but by and large, when I work with no matter buyers, sellers, platforms, my overriding question is, what rights are you granting, selling, or buying? So that's what.
Can just then because you said a lot, so let me just recap for the audience. You can tell me if it's okay or not. But basically, what we're saying here is whether if you're selling, you need to be sure of what you're selling in terms of your rights to the art that you're creating. Yeah. If you're buying, you should be sure of what rights you're actually buying, because that may affect your outlook on whether you're paying for what it is you think you're paying for, or not getting value for whatever it is you're paying for. And when transacting through a platform versus a P2P transaction, people should probably just be conscious that the platform is likely to be taking a hands-off approach and not getting involved in the nitty-gritty of where the rights are and who owns what and all of that sort of stuff. Is that basically what you've just said?
And that's exactly right. And Kat, you know some of this because of our other things that we've discussed.
Yes.
in recent months and so on, right? So there's a bit of that, but I guess the other thing I would say is, not looking at NFT specifically, but technology as a whole. I mean, when you look at any emerging technology, right? I mean, these issues will arise because the issues arise faster than what the regulatory environment or the court case law environment. I mean, it's just so much faster, right? So, but your summary, Kat, is exactly right. Exactly right.
Thank you, Roy. I think it's giving a good, I mean, as you said, at the end, you invest in emerging technology, so that's the risk you should, understand, but at the same time, that's an opportunity, right? Yeah, exactly. So to participate. So yeah, and maybe you can, do stuff and you don't have the right and you can figure out later, that's part of the risk as well. If I want to disclose my NFT on Decentraland, right? Maybe the artist is not even aware of that, and I'm happy to do it anyway, right? And maybe he's happy at promoting his art, by the way. So yeah.
Look, if my Solana NFTs go to the moon, maybe I don't really care what contractual rights are associated. Yes. So I'm still waiting for that.
Yeah. But yeah, in that risk and understanding of what are all the components, another component is around the denomination currency of that NFT. So most of the NFT are ETH denominated. Some start to be, in Solana, and maybe later on more platforms. I mean, more currencies. So James, Quinn, since you are, selling them, and if you go to Q9 NFT Hub, you will see that all the NFTs are denominated in ETH, right? So would you say that you get an underlying exposure to ETH as well, or like, investors are still thinking USD terms when buying an NFT?
I guess it depends how new you are to digital assets and crypto. I mean, for the folks that are new to the space, they're just like, oh, I just buy ETH and then I buy the NFT. But yeah, you are getting an underlying, even if just for a second. But I mean, just think about everything that's happening. Somebody mentioned LooksRare earlier, and what's going on with Looks. I mean, basically, they're dropping tons of ETH every day onto that platform. And you think how much ETH is being bought and sold constantly just to transact in and out of NFTs. And, somebody mentioned Solana. Obviously, these other platforms are starting to come in. So that's extremely important for these layer ones and that business and going forward for them. So you definitely have an underlying exposure, at least indirectly, to the ETH and the success of that network. And I mean, I think most of the folks who are new to the space just are like, well, what's the trade-off of, let's say, transaction costs versus what's available, right? Okay, this network has 90% of what I'm interested in, and this network has 10, but network A costs more than network B. So if I can't find the 10% I want, then I just pay out. And then obviously, if, specifically, if the network fees are really high, well, that makes higher priced items a lot more interesting to buy than really cheap items, because, you can't get over your fixed costs when making a transaction. So I think you're just going to see a continuous development for all the spaces. But I think that's why people get excited, going back to cryptocurrencies. I was listening to a podcast the other day, and they're like, oh, my take on what's going to be the biggest beneficiary of of the NFT marketplace in terms of investments, it's ETH and Bitcoin. And I was like, okay. And he's like, hey, think about it. Everybody who's coming into this space because they've never even heard of crypto before, basically, or ignored it and decided they liked art, or buying a gaming piece was cool, or buying a collectible piece was cool, or got into the space. Now they're a digital native. Now they're like, oh, I bought ETH before. This isn't actually that hard. Maybe I need to, put 2 or 3% of my assets into this, and now I'm in the space. So I think it's a pretty valid take on sort of what's going on. And it's definitely been a gateway for our clients. It's so tangible, right? They can see it. They're like, oh, okay, I couldn't really get my head around it before, but this I can see. And so, I think it's definitely impactful overall for, crypto economics, if you will, and the over digital asset marketplace.
Thanks for that, James. Let's look at custody now, because again, this is something that James Neary referenced, something Hoy referenced, something Max also touched on. So what are the attributes that one should consider when looking at custody and custodial arrangements around your NFT? A lot of people in Hong Kong, a lot of custodians here think that just because you've got the TCSB license, you're good and you're golden. But there are other elements, obviously, to custody, including, the necessity. Sorry, it's a word I struggle with all the time. The necessity for a trust agreement to ensure that your assets are actually safeguarded. So how does this apply in the NFT world? Max, James Quinn, James Neary even?
You want? Okay, I'll go first, even though I just spoke. I mean, honestly, most NFTs are self-custody these days. So when people are looking for somebody else to custody their assets, they're either not super comfortable or have no idea how to self-custody something, and they're basically opening up a wallet for the first time. And sometimes that works for them. And if they don't think more about it and don't make a mistake, that's fine. So I would say the space hasn't really gotten to a place where people are really digging in and going, wow, what does my trust agreement look like? Because just having to not worry about it yourself and getting hacked or screwing up or buying a fake or dealing with that is like a massive step in the right direction for a lot of people who are particularly new to crypto and digital assets. But actually, what's happening in NFTs is no different than any of your trust agreements with any of your digital assets. And you need to be thinking about sort of trust law, et cetera. I think it might actually be a better Hoy question than it is, if you're asking about the legal standpoint. From a technology standpoint, I think actually the custodians were also left a little bit on the back foot in having solutions that were really ready to offer third parties and that people can hold their assets. And it doesn't mean they're not working hard to catch up, and they certainly are, but with the different basic protocols on ETH, those took a long time to set up. A lot of these different third-party custodian platforms, you can't see what you bought. Oh, trust me, it's on here, or you peek into it a certain way, but you can't physically look at it. So the space has a long way to catch up, but it's not in a worse place from a legal standpoint than the rest of crypto or digital assets. It's actually farther behind from a technology standpoint in making it a nice experience, because hey, once I set up a Bitcoin wallet as a custodian, then kind of going back to a fungible token versus a non-fungible token, I'll just take all the Bitcoin you want. But I'm on a certain ETH protocol, for example, and I can take these NFTs, but can I display them all? Maybe I can only do these collections. We want to make sure how they work. So I really actually be thinking about the technology part at just as much as the legal part if I'm looking for a third party. But a lot of people are definitely moving in that direction because, like I kind of alluded to before, NFTs have brought a lot of new people into the space. And so they're kind of maybe not even thinking about the wallet side. They're just like, oh, cool, I bought this digital art. And, maybe they got it for half an ETH and now it's worth 5. And so now they're like, whoa, I have to think about, how this is stored. Or maybe they paid 5 and now it's worth 50, right? And so, that's, I think, where the conversation's going.
Max, anything to add?
I would just say, like, off the tail of that I've seen a lot of scams, following, propagating in this market. It's so easy because it's so new for everyone. I would say, like, it's just a very unfamiliar, different technology for most, and the ones that are reading it as a second language can really use it to exploit. So, my point of advice would be, whenever you click sign, MetaMask will pop up and it says, if you click sign, that means that you're essentially authorizing whatever that is to have access to your wallet. So only do that when there's a real trusted. So these scammers will create fake websites that look identical to the actual website that you're trying to go into. So to just be very careful, because as soon as you click sign, that your assets can be drained, and because of the decentralized nature, there's no turning back from that. There's no freezing the account, for example. So a lot of people are now switching over to self-custody, but a hard wallet, like a physical wallet, which definitely increases the security that you have on your wallet.
Thank you. Thanks for that, Max. We're starting to get questions from the audience. So just a reminder, if anybody's got questions, please type them into the box. We have time for Q&A at the end of this, and Emma and I will try and cycle through as many questions as you've got.
Thank you. Yeah, so back, to the custody aspects, and maybe, since, as James, you said that, it's not really different than other digital assets. I mean, from a regulatory perspective, how do you see, like, as well, a lot of difference with NFT compared to other digital assets? I would say, like, they are just another digital asset among others.
I think the other panel members may be able to speak better from a technology perspective, but one key thing in terms of custody is, when you invest when you buy an NFT, you're typically buying a token that authenticates your ownership and the smart contracts on the token as well and so on. But the actual artwork is not always on the blockchain. I mean, an artwork can be quite a big kind of file size, right? So a lot of the time, the artwork is stored elsewhere. Now the token will have a reference to where it's stored. It could be some kind of centralized storage solution. It could be a decentralized storage solution. So if you're using a centralized storage solution, for example, for the actual art, so what happens if that server goes offline or just goes down or disappears, right? I don't know the answer to that. When I read various platforms' terms and conditions, they will have absolutely no responsibility for it. And as I said before, a lot of these NFT projects, the actual terms and conditions for the sale and purchase isn't all that clear either. So in terms of the custody, one thing I would say is data loss, i.e. the loss of the actual piece of art, could be important. And of course, data loss is an issue that comes up in a lot of different technology areas, not just NFTs. So in terms of custody, that's probably the main thing that I look at from a kind of technology lawyer's perspective.
But in terms of the regulatory issues around this, Hui, do you see, as Emma alluded to, how are we looking, or where do you see a regulatory outlook for NFTs? And do you see it maybe taking the same stance as the SFC has with crypto, or as the HKMA is now proposing to do with stablecoins and crypto in their recent consultation paper? I mean, just off the top of your head, like a 1 minute, where do you see this going?
So probably three main areas that I think the regulatory, like I'm looking at in terms of regulatory outlook. I think the first one, as you mentioned, the HKMA is doing consultation on stablecoins right now. That's not really relevant to what we're talking about here. But one thing that we kind of look at is some of these NFTs, over time, we would imagine they start getting closer and closer to being financial instruments, because ultimately they're tokens that could have different rights on there. So that's number one. Number two is, there's a lot of kind of DAOs that are getting involved in buying NFTs, decentralized autonomous organizations. DAOs still have very unclear legal status in terms of what they actually can and can't do, whether they can even own anything. So number two is, I'm very interested to see how governments and courts around the world treat DAOs, because DAOs are increasingly getting involved in buying various things, including NFTs. So that's number two. Number three is there's going to be more and more case law surrounding disputes for NFTs, whether it's the issuance, whether it's a sale, whether it's what I said before about NFTs going missing and no one's responsible for it. So that's probably the number three area that we're keeping a very close eye on, and that's more of a kind of contract case law kind of thing. So in terms of regulatory outlook for NFTs, we're not seeing a lot of regulation specifically on NFTs, but those are the three areas that we will look at.
And I might jump in that I think that the most challenging part of my job right now at Sotheby's in relation to NFTs is dealing with our lawyers, because
I will try not to take offense to that statement.
Oh, no, they keep me in check, which is very good.
Good.
Make sure that we're, but like
full-time job for them.
You talk about DAOs, like we can't allow DAOs to bid at Sotheby's. We need to KYC every single client that bids at Sotheby's, which is a very centralized practice. We effectively charge sales tax on NFTs in anticipation of some future regulation. So we're definitely approaching it in a very different way than OpenSea, for example, where there's no regulation.
But wasn't there, Max, just on what you said, but wasn't there a DAO that was formed specifically to bid on a copy of the U.S. Constitution?
Yes. So that was the Constitution DAO that got all the headlines. There was a very last-minute elegant solution that we created, but there was KYC involved and there was a financial backing. So we were satisfied with it, but it's not something that we will be doing in the future. We're looking to find ways, but right now the way that DAOs are structured or not structured gives us very limited possibility.
Okay, just wanted to clarify. Thank you.
Oh, absolutely, good. So one off.
Okay then.
So thanks. And Max, as well, another maybe one for you and James. So because Max, you scared us a bit, I think, with the custody aspect of things, so I think it's good to remind people the risks they are taking. But so if you don't want to take exposure to the NFT, is there any other way to, gain exposure through proxies? Or that's the only way?
I mean, you can gain exposure, I guess, from, the crypto, like from Ethereum or Solana, that will benefit, as the blockchain grows. And NFT, I think, is a specific use case that has been growing these blockchains and the value of the coins, currencies associated. But I think, I guess there's also fractional ownership, like with a DAO, but again, it's still, maybe someone else has some other options. But for me, I think you really have to own the actual asset to get full exposure to it.
You can still benefit from the entire growth of the marketplace, as Max said, and I mentioned earlier. It's like picks and shovels, right? So at the top level on the layer ones, the different companies that are actually, NFT marketplaces, et cetera, coming on. Animoca just did a huge raise. They're like one of the biggest NFTs operators in the space. And I think a lot, probably most people will make, as relates to the growth of NFTs, much more reliable money investing in those. I think somebody said earlier, they're like, yeah, Hoy was like, oh yeah, mine are underwater. 90% of everybody's NFTs are underwater if they've, unless they got into this quite early, right? It's what you're hearing about is the winners. It's not easy to pick the winners. Once you start getting in funds, portfolios, et cetera, then you can maybe sort of get involved in that. It's I think much more difficult as an individual user to just, jump on to OpenSea or LooksRare and just, oh yeah, bang, I just made a lot of money. It's fun to see and certainly great to try. But from a pure investment standpoint, I mean, I think it's a classic story to be looking at, what operators are operating best, what marketplaces look good, what are the other interesting technologies around that people are coming out with it. And look where the VC money is going. It's going into those things.
Yeah, I did a little thinking on this proxy idea as well. And I like Max and James's ideas there. Obviously, yeah, Animoca did a big raise. There's a big NFT fund, one of the biggest out there, called Starry Night Capital. But for retail investors, it's very difficult to get access to something like that. So I was thinking about, if you're a retail investor and you wanted to get access to the NFT sort of boom, what would you do as a proxy? So I came back to the metaverse and the gaming stocks, which also trade heavily with their own NFTs. And I think there's a good correlation between those. So maybe Sandbox or Decentraland on the metaverse side, and then on the gaming side, you could Axie Infinity, or what's the other one? Stars, the new BSC one, because that one, they're trading a lot of NFTs, so it's going to help have a network effect with the gaming platform and the token, the governance token that governs the game. But really, you have to own the NFT.
Right. So this is the last scheduled question for the panelists, and then we'll move on to Q&A. Again, everybody, please just type your questions in the box, and I'll be cycling through them because Emma's having tech issues and can't actually see them. But the last question from Emma and I, and this is open to the entire panel, is, from what we've seen, anything can be tokenized. And so with this in mind, where do you see the future growth for NFTs? Will they remain commoditized assets? Is there anything that you see that has a particular element of value? Is there something new that perhaps investors should be looking at to place their value in?
I'll jump in here. I think a lot of people are looking at NFT for supply chain things, whether that's luxury assets, whether it's jewelry, watches, bags, stuff like that. That's one avenue that people are exploring. Lots of projects out there trying to raise money in that angle. And then also another area is stuff like real estate, title transfer, or even voting. So there's a lot of sort of applications from that. They're not quite as interesting or sexy as art, but I think that the process and the technology will be used in a myriad of different ways on the back end to secure assets and supply chains.
Great. Max, James, Quinn, Hoy.
I'm looking to, I think James mentioned, compared to physical collectibles and art that Sotheby's has built its entire business on, the liquidity in the volume trading of NFTs has been really a very interesting phenomenon. I think that's the ease and the efficiency that the blockchain creates. So I'm looking to in different ways in which we can implement some of the efficiencies of trading digital assets onto our physical core businesses and unlocking some of the potential there.
And in terms of the specific things that NFTs that the token is going to be representing, I think James Neary hit on it with real estate is going to be super exciting. But I think one of the big financial innovations is just going to be all the sort of financial products you can create around NFTs, like getting shipping rates or getting paid on that, being able to buy into something. Effectively, the NFT allows you to. So I don't know if people remember something that came out more than 20 years ago, is considered a massive innovation at the time. That seems like you could do in 5 minutes these days with NFTs, was the David Bowie bonds. He basically borrowed a bunch of money himself and said, "I'll back it with the royalties on his music." Every artist, athlete, etc., can effectively do that and borrow up front on their potential lifelong earnings. Companies can do that now. You can innovate the technology to put that together effectively, so quickly and so cheaply compared to how it was done before, I think is going to be massive. So you're going to have sort of a disintermediation and a lot of that, middleman that needed to sit in between a lot of these creations, and people are going to be able to create them on these different technology platforms super quickly. So I mentioned before what artists are going to be able to get on their side and being able to sell things into perpetuity, but that's going to create a lot of opportunities for income streams or income streams to back loans or different things on every other thing you haven't thought of before, and I think that's incredible. You're really going to see how blockchain can make things clearer and cheaper. Basically, NFTs are really going to show people that.
Okay. Hoy, any final thoughts before we move to Q&A from the audience?
Yeah, asking a lawyer about the future of technology probably, that doesn't always work very well. But one thing that I think we're spending a lot of time looking at is just the use of NFTs in video games and also in the kind of wider metaverse, right? And where the other thing that we're looking at a lot at is just kind of how we're looking forward to, not looking at, is interoperability of different blockchains, right? And being able to take NFT assets from one metaverse environment to other metaverse environments, and what that really means in terms of intellectual property, in terms of contractual law, and so on. So when we see a lot of these kind of Web3 metaverse NFTs and so on, there's a lot of kind of contract law and IP issues arising, and I don't have answers to most of them, but we're looking forward to finding out in this year and beyond.
Great, thank you. I think I speak for Emma and myself and the blockchain community. This has been hugely informative. There's still a lot of questions coming through, and we've had a huge turnout. So turning now to questions from the audience. James Quinn, I have one from James Lindsay. I'm not sure who this is.
He specifically directed it to me.
Yeah, I don't know if he's directed it to you, and I'm not sure why he didn't just walk over and ask you this in the office.
Right.
But, feel free to answer, or maybe James Neary or Max can answer this one. But James Lindsay's question is, how big is wash trading and market manipulation within the NFT space?
Well, I mean, I can't tell you how big it is if I knew the answer to that, but I can tell you that people don't really think about this, and they're like, oh, it's so exciting. In NFTs, I can see all the historic trades, which is really cool because, maybe I have to take somebody's word for it where physical art traded. On the other hand, it's pretty easy for me, theoretically, or somebody to mint something, have a different wallet, buy it from that wallet at a higher price and buy it again. And you have 3 prints and boom, wow, look at this thing went up 3 times. It's worth this, let me buy it. People are definitely doing that. You should be careful. Max mentioned scam specifically. This is another kind of scam. So I just encourage people to take it with a grain of salt that the price history, just because you see it print on a thing, is real. right? And so, I think you should be thinking about who's in the community and what they're doing on that. And that's a lot better way to sort of double check on if prices and trading are actually real.
I think
so then Max and James Neary, having run art exhibitions and getting involved in this, how do you do the back end check for this?
Well, there was a wonderful example actually very recently, actually the last few days, on LooksRare, where MeBits were trading, in OpenSea for, call it $20,000. And then someone was trading these same MeBits for $50 million US back and forth on LooksRare between two accounts to generate credits to get LooksRare tokens to increase his volume so then he could sell them, I'm assuming. So yeah, I mean, things like this are definitely happening. On the more art stuff where it's one-of-ones, I don't think it's happening as much. On the PFP, where there's larger communities, where there's 10,000 and stuff like that, I think they're more prone. And the transactional and frictional costs are obviously smaller through the platforms than in traditional art markets. So I think that lends itself to more manipulation if that's what people are trying to do. But yeah, it's like James Quinn said, it's impossible to know exactly what's going on. Max?
Well, at Sotheby's, I mentioned we do KYC. So that initial step of onboarding does, I think, dissuade a lot of the manipulation. I can't say that it completely abolishes it, but it does make it more difficult because we don't allow you to sell to yourself, obviously. Because we, both on the buy side and the sell side, we need to know the identities of those individuals. So we did a sale of secondary market works in October of last year. And on paper, it went very well, around 20 million US total. But a lot of the prices were achieved, not a lot, but several of the prices achieved were actually below the floor prices on OpenSea. And so some people were questioning Sotheby's role and like why it was needed. In my response, it's a more true representation of the actual demand in the market. And I think, as James mentioned, just because you see a price that is made and it's on the blockchain and you think that it's legitimate, it's
validated.
Yeah, it's validated. You can't mess with it. You can't manipulate it. Once it's set, to set it, it's very, there are characters that are obviously, pursuing this. So just to be careful and to do more research and to really understand. I mean, there are also, there are people that are outing scammers and they're tracking the money flow basically, and they will come out and say, and then so you get branded or you get labeled as such. So, there's two sides of the coin, but it's just definitely, it's so new and there's so much funds and excitement that's going into it that there is definite caution that needs to happen.
Okay, great, thanks. Again, well, let's move on to something. So question now in terms of China. And so, what does the panel have a view on what the marketplace and infrastructure in mainland China look like? And specifically, again, for Max, with China being a top 3 country in terms of global art investment and Sotheby's having a 32% market share in auction houses, where then does NFTs fit into Sotheby's China strategy?
So, I think it's still developing, I would say. I know that there's huge potential, but just like we've only pursued 10 or 12 NFT sales to date, we are cautiously approaching each decision we make. And I think China is just too large and too much potential to make a wrong step at the beginning. So I think we recognize the potential, but are just taking a little bit of time to understand which direction best to approach.
Any thoughts on the infrastructure and development of the NFT space in China from anyone? James Neary?
Yes, so from what I've been reading and I've been listening to a few of the podcasts, they're going to have some sort of closed network system. So it's not going to be distributed. They're looking at something called DDCs, digital distributed certificates, instead of NFTs, where everything will be trackable, KYCable, and closed, which would follow, kind of the normal, how they're dealing with most of their industries over there. But as Max said, it's still up in the air, and nobody knows how it's going to develop. So I guess to be determined. I mean, obviously, we all know that cryptocurrencies are not being promoted in China as well, right?
Right. If there's nothing else, we'll move on to a question that we have on tax and assessing tax liability and the nature of NFT. At what point are these types of assessments made, from your practice where you've sold some and engaged with them yourselves or advised on the purchase and ownership of them? The example here is an NFT could give you rights over a shoe that could be released in the future, or it could give you other forms of economic benefits. At what point then do you look at the tax liabilities that are associated with such?
James Neary, did you just take yourself off mute to answer a tax question?
No, I didn't. I think we'll leave this one over to you, James.
Yeah, I think this is, not only, am I not an attorney, I don't play one on TV, nor an accountant. I'd throw this one at Hoy, but obviously I don't really see the NFT tax situation as being any different than any other financial instrument, ultimately. And I'm sure the tax authorities are going to think of it somewhat in the same way, but this is way out of my remit. And frankly, I wish I knew the answer to all those questions, because people haven't actually necessarily sorted them out on cryptocurrency. And now we're talking about an NFT. So unfortunately, I wouldn't be much help there.
Okay. If there's nothing else, seeing as we've just passed 7 o'clock, I may call time on this. So thank you, everyone. Thank you, Max, James Neary, James Quinn, Hoy. This has been fabulously informative. I am sure that people will be reaching out to you on LinkedIn. I'm almost positive people will be reaching out to Emma and I on LinkedIn, because it's already started happening, for more information on this. Thank you again for your time and for being so well prepared. We'll be in touch in the future for future events.
Thank you so much, guys. Thank you. Have a good
Thank
evening.
you.
Thank you.
Thanks very much.
Thank you. Bye.
Thank you.
Bye.
Have a good night, everyone.